Welcome to Markets Now. I'm Michelle Rook with Scott Varilek of Kooima Kooima Varilek. A mixed morning in the grains. Livestock futures seeing some pressure. In fact, cattle seeing some triple-digit losses here today. Let's talk about the futures first. Where do we need to hold here today? Are you getting concerned about the red you're seeing here this morning?
I think there's always concern, and thanks for having me. But yeah, areas to hold. You have this quick open break, you get a little bad news right out of the chute. So now you're going to try to, quick sell. And that's kind of how a lot of traders are acting lately. We're trying to be open. We've got this bull market, but you've got a lot of risk. So when you see a triple digit lower day, it's the quick sell that hedgers kind of run into. And that's what you see. So we got a 185.10, the recent low for Feb, and you got a 184.85 or 100-day moving average. So we got right down to those this morning, down over $2 and tested those levels. It's a market that the funds are long. The open interest is at a good level. So we're going to see if they're going to hold. How strong is this? How strong are they? They've proven to be strong as the cash market has. So it's we're kind of getting into that danger zone territory here. November 8 is kind of an odd time to say now we're going to roll over the market, be hot, good all summer long, and then head down now. But so a little bit counter seasonal, but plenty of pressure right here out of chute and hasn't rebounded yet.
Some of the bad news that you talk about that might have started us a little bit lower this morning. Choice boxes dropping $6, and we haven't had a lot of cash trade, but it's been a little weaker so far, hasn't it?
Yeah, the $6 lower boxes. I mean, that's your first. Everybody sees it, and all night long you're getting text messages. What's this going to do? So the nerves just start spiking already, and I think that's kind of the reason to push it. And we also thought, okay, we've already broke this market, and we've got a cash market that's been 190. And now that we've dropped the futures, $2 to $3, it's easy for those basis traders to pull that cash down. So you're almost kind of expecting that, okay, now the cash is going to start to roll over. So that's two things that's going to hurt the market here today. Could not get 189. Some guys that were really trying to get it even $1 lower. There's been some 188 reported. It did happen. That would have been yesterday before this break here today. So I know that there's some 186 bids floating around softly, and some 296, some 294 kind of stuff. So all of that's trading just a little bit lower. And guys aren't sure if they're going to take it yet, but ultimately it's still a good price. So I anticipate that that's going to start being accepted here probably fairly quickly with the nerves being this high.
Yeah. Production, slaughter numbers down about 3%. We're still making up for it with these heavier weights. That's also been a bit of a headwind, hasn't it?
Yeah, it's kind of amazing how we got 3% less on slaughter numbers, and we're just barely off the production pace. And that's a lot to do with the market setup we have. We've got a packer that knows we have tight numbers. They want to help us make them bigger. They need the production. And we've got a cost of gain that's looking at, whether it's 85 cents to $1 or whatever range, and you're selling fat cattle out the door at $1.90. It pays you to make them bigger. And, the comment I hear, you're dumb not to, you look at the feeders, you're going to go buy some feeder calves that break even at, $2 to $3 higher than the board. Or are you just going to keep feeding what you have here, and every pound you put on them, you're going to make money on? So that's been a lot of the theme. Genetics have certainly proven that we can keep this trend up to where we want bigger weights. So, feedlots are interested in making them big. They're doing it. There hasn't been any discounts. The packers have been welcoming it, like saying, yes, they know they need the beef. So when does that run out? Well, I don't think it's now. I don't think that the numbers are there to say now they're going to start putting on weight limits or anything like that, or discounts. So haven't had any of that. I don't, anticipate any of that happening here, especially with a little bit of an investigation going on. So we should be able to keep them moving, I think, with the tighter numbers. If we feel like this is over and guys want a quick sell, I still think there's going to be some ability to do so. I'm not super worried about it, but weather's been good. You've been able to make them big, and that's, making up for a lot of less numbers that we have on feed.
Yeah. What outside market things are you watching right now? Election, new administration, You just had interest rates down another 0.25% yesterday. How is the market, looking at all of those things from a cattle perspective?
Yeah, thank goodness that election is done. I've never been so happy to watch insurance commercials. It's like,
Yeah,
oh,
it's just nice to get some of that uncertainty out of the market, right? Because we
yes,
thought
yes.
maybe we weren't going to know who the president was going to be for days, maybe months.
Right. So the market's been pretty wound tight, revolving around the election. And, there's a lot of talk. Why didn't the cattle move higher with a 1,500 point higher Dow Jones trade? And, part of it is, we had a 1,000 point break on the Dow Jones and some big breaks on those stock markets ahead of the election. And cattle really didn't see much of a drop. We still had 190 cash. We were still there. So the fact that we didn't participate in the big up, well, we really didn't participate in the drop. So, I just think we can put it in our back pocket and say, okay, good. Stock market's up. The economy's feeling a little bit better. It doesn't hurt. It's not bad news that we didn't, move higher. It's going to help us get out of this market. And when you have a fund that's, funds that are this long, the livestock, I think that helps them out when they say, okay, that's not a worry for us here. That maybe we have some greener pastures coming. So that might help this fund that's long to not scare out quite so quick, in my opinion.
Yeah, I would thought it was a little disappointing though too that the cattle futures didn't go much higher following the stock market when you're up 1,500 points.
Yeah, we just
Okay,
don't have
hog
that
market.
news, to pop it through to $2 or 220, that
Yeah,
next level. We don't have that little arrow to shoot yet. So
yeah, no doubt. All right, hog market looks like the futures have kind of started to top here. Yet the lean hog index continues to go up. Do the funds continue to defend their long here? I was impressed yesterday with all those export cancellations we held together as well as we did.
yeah, it's holding together pretty well, and I guess we've all been a little frustrated with being on the wrong side of hogs here lately, and now we're seeing okay, the straight up pattern has slowed down. We're on a little bit of a break here, so what I'm looking at, funds big long position, and you got an index that's over $90 right now. So does that break or not? Generally, that's on the way down here and starting to move lower. And what I'm hearing from the supply side is okay, some of the PRRS problems, some disease issues might have created a little bit of a hole right here, but then we did backfill those barns and they did get filled up. So they're coming just a little bit later. So the seasonal is just a little bit behind. I still think it's going to show up. And as far as the exports, we've got some, high nerves in that market. Pork need to export. So we've got Mexico is almost half of our business there on the export news there. So a lot of talk of China and tariffs, but they're like 5 or 6 on the list. So it's more this Mexico. If we start to, have some, trade wars with them or not, that could be nerves are going to be high for the hogs if that starts to happen. So I'm still geared up to see if the funds are going to hold, but fundamentally I'm still saying I need a little bit of protection on here.
Yeah, and hogs may be down this morning along with cattle, but I think cutouts were down over $4. Bellies dropped like 17, so that's probably part of the pressure too, you think?
Yeah, I think so. Yep. Cancellations, some of the product being down. And, those discounts are usually there for a reason in the hogs.
Gotcha.
You see 70 cents lower D's hogs at 80.50 and an index over 90. Those are there for a reason. So I think that's just that seasonal is going to show up just a little bit later, but it's coming.
Grain market, we are mixed this morning. Soybeans kind of easing back just a little bit, corn just a little bit higher, but it's been amazing to watch how soybeans have rallied in the face of possible tariffs coming for China. What do you think is driving that market? I mean, we have a report coming up today, but I don't expect to see much in that. So what else are we going to trade?
Yeah, it's been slightly head scratching with yesterday's big run in the beans, and a lot of people asking why. What's the story? And it doesn't really have this major story other than you can look at your bean oil. Soybean oil has had a good run here, and that could be one of the driving factors. Yes, so there's that, but for us, I think we're just trying to look at the money flow, the funds, and how they traded when Trump was looking like he was going to win the election. The stock market was moving higher and grains were heading lower, and especially the soybeans, because we all remember what that was, the trade wars with China and how much of a struggle that was on the grain prices. So And then I think once we kind of woke up the next morning and there wasn't any follow through, it didn't just, yes, stick a knife in it. It didn't happen. So then it started to move higher. We had some shorts trapped at the lows that thought, instant gratification was not coming. So unwinding quick. Okay, we got to get out. So for me, we still got some grains that are locked in a little bit of a range here. I don't see breakouts on either side right now. So there's always going to be that overhanging factor that, yes, we could have some wars with our trade partners here and there, and that's going to keep a little bit of risk on. And WASDE today, we're just that little reminder of the crop that we had, the big numbers, and we've got a strong dollar. So I'm not looking for this big, long, extended rally here. I still think we're sideways range, and that's where we're going to sit for a little bit here.
Well, we have to, in the corn, take out the October high, which is around 434.25. We haven't been able to do it, and we had more export business coming at the corn and the soybean market this morning. But my question for you is, if this demand keeps coming at the market, if we keep seeing these front-loaded purchases here ahead of Trump taking office, will we be able to get above those resistance areas?
For me, it's a short-term kind of thought there. If there's some front loading before Trump actually takes office, I think we're looking at a futures market here. It's not going to say the July futures need to take off and run. So when I look at the carry spreads on some of these markets, I mean, November soybeans were more than 20 cents under January. December futures were 45 cents, 47 cents underneath the July. There was just this big wide carry. So I think it's just it's narrowing that carry some. So you might see a little front led action here, but we're not really seeing, I don't think we're going to see the back months just take off higher and think that this demand is going to stay. It might be just that narrowing of the carry, get a little fun now. I don't know that we see this big long rally based on that news there.
All right. Thanks so much. It's Scott Varilek with Kooima Kooima Varilek. That is Markets Now.